How to choose the best mortgage lender for first-time homebuyers. We're talking about that today in this video, and I'm going to give you all of my wealth of knowledge after 18 years of experience. Be sure to stay tuned to the end. Team would love to help you with your mortgage financing in Louisiana, Mississippi, Alabama, and Florida. We want to be your loan officer. Choosing the right lender is really important. Buying a house is a very stressful time. It's like getting married or having a baby or getting divorced. It's a big life milestone. And you're going to work really closely with a lender. I mean, sometimes it's months and months and months while you're looking for a house, or sometimes if you're lucky, you get pre-approved and find a house, and even then, it's 30 to 45 days of an intimate relationship with this person. My biggest tip is that go with your gut with whatever makes you the most comfortable. So when you're shopping around and you're trying to decide who to go with, if you talk to a few people, really pay attention to those conversations and see who makes you feel the most comfortable. There are many different routes that you can take when it comes to choosing a lender or a broker. You see, there's a bank, like you could go to your bank. You could go to your credit union if you've got one of those. You might go to a mortgage lender, or you might go to a mortgage broker. Those are some of the several options that you can choose. There's also like portfolio lenders and things like that, but let's keep it really simple for today. Most people are choosing between a lender, a broker, and a bank. Now, there's a common misconception that I'm just going to go with my bank because they have all my information, and not necessarily, because they're going to need the same information that the broker or the lender is going to need, because we're generally all following Fannie, Freddie, Ginnie, or VA guidelines, and whatever those documents are required. So for the most part, it's not like your bank's just going to have like, oh, I've got your information, we don't need much. It's not necessarily true. And when it comes to a bank, they are lending their money most of the time. So they've got their one pool of rates to choose from, like this is their rate and this is what you get, and it is what it is. And there's sometimes that some banks don't offer certain programs, like the USDA RD loan for one example. So you want to make sure that the lender or bank that you're choosing does offer all of the programs that might benefit you. The other thing is that when it comes to, let's say, a mortgage lender or a mortgage broker, a lot of times they are shopping the rate with multiple servicers. Now, a servicer is who's going to collect your payments every month. A lot of times the bank lends their own money and services their own loan, which means you're getting that, here's our rate, right? But there's many times if you're going with a lender or a broker that they may not service their own loans, they're going to sell their servicing, and that servicer is going to offer rates that they then can forward to you as the consumer. So in a nutshell, the bank might have one place or one pool they're shopping from with a rate, while the lender or the broker could have 15 pools that they're shopping from to try to get you the best rate. So that's one of the advantages of maybe not necessarily going with the bank. Now, we want to make sure that you're comfortable and you're going with your gut. We want to make sure that they're offering all the programs that might most benefit you. What else is important? Well, some people really want to do everything online, and that's totally fine. And some people want to do everything in person, and that's totally fine too. Now, if you're one of those people that you don't want to text and you want to do things more in person, then some of these really big online companies probably are not going to be a fit for you. You might want something more local and more personal, and that's okay. You can dictate this. This is a big deal for you, and you need to do what is best for your particular situation and for your comfort zone. Now, when it comes to picking the lender, bank, broker, right? And then picking the loan officer, you want to ask some questions. You want to ask how many deals that they close. You want to ask how long they've been a loan officer. You want to kind of vet these people, right? You want to make sure that these are knowledgeable people that are going to take great care of getting you to not only approval, but getting you to a smooth and on-time closing. And the loan officer particularly is a big, big piece to that puzzle. You want to ask them how their process works. There are some companies where you just deal with a loan officer and a processor and that's it. And then there are some companies where you're dealing with 4 and 5 different departments or 4 and 5 different shuffles of who you're talking to throughout the process. So that would be another real important question to ask, because one versus the other might make you more comfortable. If this is your first time to the channel, welcome. Thank you so very much for being here. Please be sure to subscribe. Don't forget to hit the bell to be notified every time I drop a new video, which is every week. And also give me a like if you enjoy the video today. You want to be as educated as you can about the process and about what different types of programs might be available to you. Now, I'm going to be honest with you. That's really hard as a consumer. You can really get lost in Google, which is one of my motivations for starting the channel, is trying to give detailed and accurate information on this stuff as much as possible. This figure blows my mind. I understand that it's on average about 21 million people a year in the US apply for mortgage loans, and around 7 million or so actually go to a closing. That's not a good conversion rate. Now, I don't want you to be discouraged, because I don't believe that's because only 1/3 of people actually can get approval. I think it's because lack of accurate information, lack of knowledge, and miscommunication that is a big gap that causes that big gap, right? So you want to make sure to gather all that you can. Now, if you want to check out, I've got videos on my channel about the different loan types and overviews that you can check out as well. That should be able to help you. I've got some other videos on tips for first-time home buyers. I've actually got a whole playlist on home buyer education and a whole playlist on first-time home buyers as well. So you can check those out if you want to dive deeper than the things that we're covering today. Now, when you're going to try to choose this person that you're going to work with, what if you're not even sure where to start? If you've already started working with a realtor, they're usually a great trusted advocate to help put you in connection with lenders that they trust, that they've had experience with. And so I think that's pretty strong. The other thing that you can do is ask for referrals from friends and family. Because if they had good experiences, then they're going to want to share that information and be happy for you to have a good experience as well. So that's another really great place to start and try to decide who to go with or what type of lender to use for your specific transaction. Now, last but not necessarily least, you want to make sure that you don't just start calling around, hey, what's your rate? Hey, what's your rate? Hey, what's your rate? I'll tell you a quick little story. I didn't know any better when I was buying my first 2 houses. The first one I bought was at 18 years old, and the second one I actually built. And the second one I specifically remember doing that. What's your rate? What's your rate? What's your rate? Called all these different places and got their rate. Well, guess what? If you're asking just for a rate, you're most likely getting a rate of a 740 or better credit score, 30% down, a conventional loan, paying a point, a loan amount above 250, and a bunch of stuff that are assumptions. So the second that you're FHA, you just got the wrong information. The second that you're RD, you just got wrong information. The second that you're VA, you just got wrong information. The second that you're a 680 and not a 740, you just got wrong information. That's why you want to get a referral of who to talk to. Maybe call a couple of people, decide between lender, broker, or bank, or credit union, like I've mentioned, and then talk about and make sure they have all the programs that might fit your needs, and then go through the pre-approval. And throughout that process, then you can get a rate quote. Now here's another big thing. Most of the time, you can't lock in your interest rate until you have a property address and a closing date. That's another huge lesson that I learned. Remember, I called around before I built that house. This was in the 90s. And what's a rate? What's a rate? What's a rate? Well, everybody gave me a 30-day rate quote, which is probably what you'll get as well. Well, I was building a house. So I went with the person who gave me the best rate quote. But by the time that house was built, this was again in the 90s, with excellent credit and equity, the rates were at 6.875 when I started building. Well, by the time my house was built, the rates for good credit with equity were 8%. And I wasn't educated that there was a difference and that rate lock time frame mattered. And I almost couldn't afford the house I just spent a year building. Now, you're probably not going to build, you're probably going to buy existing. And so you're going to see less of a traumatic difference in those rates, but they will fluctuate because rates fluctuate every day, sometimes multiple times a day based on the market. So what the rate is at pre-approval might not necessarily be the rate once you go ahead and lock in. Now, one of my best practices as a loan officer is I'm just using a very generic rate. I'm not quoting a rate here, but let's say if rates were at 3%, and I was doing a pre-approval, I might try to do that pre-approval at 3.2 or 3.3% because I don't know where that rate's gonna be when they lock. So I'd rather build in a cushion to be safe because I don't want any surprises for my borrower. Thank you for tuning in. I hope you enjoyed the video. Whether you're moving in 9 days or 90 days, give me a call, shoot me a text, or send me an email. I would love to be your lender. My team would love to help you if you're in Louisiana, Mississippi, Alabama, or Florida. If you're in other states, I can't help, but I hope that this information has been really helpful to you. Thank you again, and I'll see you in the next one.